Hey, welcome to today's video. I hope you are well. Now, if you need a cryptocurrency and you want to learn more, subscribe, hit that bell button and press all notifications. That would be awesome. Also, check out the pinned comments for the links. You can start cryptocurrency education for as little as £5. There is a very awesome little discount in there if you go through that method. Okay, let's go. So, Leo token, let's talk about it. Is it going to be better than Binance token? What is the differences? Why are Bitfinex doing this token offering, or done that token offering essentially? A lot of people have been asking, what is it? Why is it this, that and the other? We're going to find out, is it good? Is it bad? And why or why not you should potentially look at investing in it. So let's get started and I'll see you in a second. Right, now that we've got that bit out of the way, the jargon bit, let's talk about Leo. And I'm going to put my whole stamp on it. I've done a few videos about Bitfinex and Tether. I'm not the biggest lover of Bitfinex, I'll be honest with you. I think it's a bit sketchy, but that's not to say that it isn't. You know, that's just my opinion. Everyone's got an opinion. They're like, you know, like anything really. Everyone's got a mug in the house. I've got a mug with a cat on it. You know, it's one of those things. So everyone's got one. Everyone drinks a drink out of a mug of some description, I hope, unless you are really in some dire straits with your cryptocurrency and you are drinking out of a bowl. So let's talk about Leo token, because I'm a little bit confused. I'm not going to lie, a little bit confused, because it is a bit different to most things I've ever seen in my life. Why? This is actually their second ever token offering. Okay, BFX token. Now I've got a load of notes on my laptop here. I'm sticky out. So I'm going to be addressing downwards. So if you're wondering what I'm talking about, it's probably because I'm looking at my keyboard. But they did a token sale in 2016. BFX token. Check it out. Didn't quite go to plan, but it was due to their hack. They got hacked in 2016. They made a token offering to pay that money back, essentially through investment and obviously price rises. We all know what happened in 2017. We popped to the moon, so it kind of covered itself. But that is a red flag in my honest opinion. I think why they're doing this. But this is why they're doing Leo. Leo comes out of the back of the 850 million Tether that was used, or technically crypto fund capital, losses of funds, $850 million. Okay, so that was funds that they had access to, and then it was no longer given to them. So what they had to do was they had to take money out of Tether, and this is where the whole New York State General Attorney Office kind of got involved, and they wanted to freeze the assets, and it all became an absolute mudstorm. And now we've got this, okay? Because at the minute, as it stands, Tether is only backed by 74% of assets in terms of real dollar value. So there's only 75% of it. If you go on the Tether website, it says 100% backed. It's actually 74% backed. So that is why it's been born. That's why it's been given, you know, precedence in the space. It's out. It's released. It's there. So let's talk about it in a bit more detail. Should you hold it, and why should you hold it? If so, why should you? One thing that is very, very apparent is comparisons to Binance token. I want to come on to that in a second, so stick around. But the one thing that is, I'm just looking at this here, the one thing that's very much apparent is the fees, all the good stuff that is kind of the benchmark model is very similar to Binance model. They're trying to become a token economic power force using the Bitfinex token. Now the biggest problem at the minute stands with the similarity of this. Binance is the biggest by quite a stretch, okay? Number one in terms of exchange volume, users, and most importantly, liquidity. But there will be liquidation soon because it's going to become margin trading as well, like Bitfinex. So there's always going to be room for new people to go into Binance, and a lot of people do just venture into Binance. And personally, I would rather recommend my people, my group, and my Telegram users to Binance over Bitfinex. That's my personal honest opinion. Just because it's, you know, mud sticks essentially. And I know Binance has been hacked, but Binance has a very good economic model and it covers losses. Bitfinex has had 2 hacks now, or 1 hack and 1 issue with investment where it's not had that, you know, it's had problems. So Let's talk about it. Now, if I scroll down to number 41, you're going to see Bitfinex. Bitfinex is all the way down here. It's one of the oldest, most established ones, October 2012 that it came out, and it's higher than Kraken, obviously, but a lot of these exchanges are quite big, but in terms of liquidity, it's a lot lower. So that is one overriding issue when it comes to token price. Another issue as well is token supply. I want to talk about that now. Token supply is a lot higher, 1 billion. But this is going to come down a lot, and there's only been 18 million traded volume over the last 24 hours, and the market cap is pretty high. It's ranked 13 in the space, essentially. But one thing I want to address is this, the token economic stance of it. Right, why? The biggest problem with this is trying to be like Binance Coin. It could work, it may not work. It's a risky hold, in my honest personal opinion. It has some similarities, I want to come on to those in a second, but one thing that is very, very good about this is the reduction in fees and the repurchase and burn commitment. So on a monthly basis, iFinex, which is the overall umbrella company which ties everything together, is going to do a market buyback of a minimum of 27% of consolidated gross revenue of iFinex, apart from eFinex. Okay, don't know why. But they're going to be buying back these tokens at a 27% rate on profits of the company to pay back that 855 million loss that they've pretty much had, and they've had to eat into Tether, essentially. So that is one good thing, that they are planning to commit to pay back all those funds to make Tether whole again. So that doesn't make me want to invest, though, by the way. Just going to put that out there. But that is a commitment that they rubber stamped it and thought, yes, let's go for it. In addition to the above, an additional equal to at least 95% of the recovered net funds from crypto capital will be used to repurchase and burn outstanding Leo tokens within a 28-month period. So what does that mean is basically anything that got over, they were going to basically buy back the tokens and burn them. And they want to make the tokens go all the way down to 100 million. So that's 900 million less than what the actual physical supply is right now in terms of release. Okay, so that's one good thing. Now, I've already mentioned that, but one thing that is quite alarming, that is interesting for an investor, is 900 million tokens off the supply is a lot. Now Binance have done the same thing. They've done it from 200 million to 100 million. That's where their plan is going to go down to, 100 million. But 900 million is a massive, massive jump. And is it realistic or not? I don't know. They have to hit so many targets, so many margin kind of profit elements to get down to that number in a certain time. But they have to recover a load of money. They have to recover it, because it's investment, it's Tether funds. They've got to make it full. So will this, cause issues in the exchange? Will they increase prices or not? But utility wise, let's talk about the utility, because this is kind of the cool thing where I do like it. This is where it's worth investing if you get a good entry price. Now do not FOMO into this, because not every exchange token goes to the moon. Not every exchange token has done a Binance coin. Look at KuCoin, it's not really done it yet. ABC coin or whatever, it's not really done it yet. Leo, it doesn't look like it's doing much at the minute when you look at current prices, but they are planning to do a lot of token burn. So for example, up to 25% of trading fees will be reduced in the first Leo if the trader holds it. So 25% off the trading fee is quite high, in my personal opinion, quite good. But there's other elements as well. If you hold over so much, you get an additional amount off. So for example, I think I got it wrote down here, you get an additional 10% if you're holding over 5,000 Leos, okay, on top of what you're doing. So your taker fees are reduced significantly compared to what Binance is in reality. When you think about it, like 15 to 20% is quite high in my book, and it will make Bitfinex more attractive to you. So when you look at it from that point of view, they are chancing the opportunity that cheaper fees, a better token economic system where more people will use it, more people then use a Leo token, will create a price rise, which means they can pay off their debt faster. It's all a systemized plan, which is good. But for a holder, it's pretty risky, especially a retail investor. Okay, so they've also got lending fee reduction as well, where it's actually capped and you get a discount on it, which is pretty good. But other things like it, you've got to think, they all require utility usage people. Bitfinex need right now to get confidence back of users. The people need to go back onto Bitfinex to trade. Yes, people are still using it, but you can tell the volumes came down a lot. You can tell that. It's obvious. When they're ranked 41 now, they used to be in the top 10 quite a lot of the time because they had quite a big array of altcoins, had a lot of margin accounts going. So it was obvious that they're going to take a hit. But this as an investment could be good if you get the right entry point and you are not risking your own money. Put profit into this, not your own money, because it may well surprise you. So let's look at a few other things. Let's look at the comparison with Bitfinex and Binance. Okay, so Leo token, initial token offering 1 billion to 200 million compared. Now the tier discount is better, but the reason why it's better is because they offer more discounts. Binance still have a very high reduction of fees, which reduce over time that you are actually on the exchange in terms of how many years. The growth monthly buyback is really good because they've got to pay back the tokens or the funds that were recovered as of Tether. So that looks really good on the offset, but Binance have never been in that position, so it doesn't matter. So they don't have to worry about that. But that is probably why 1 billion is quite high, and it's going to eventually go all the way down because they've got to raise the capital via those tokens and sell and burn them, sell, burn every single time to get that money back, to get Tether back to where it was and ultimately pay back people that have lost money. Now that looks good, but ultimately it's there for a purpose. It's a guarantee that they are expected to get. Brave move by Bitfinex in my personal opinion. So they've then got the token burns. These are obviously from the amount above, but you've also got burning of fees, outstanding tokens that we burnt at 18 months of recovery fund, so that was obviously the above, and for the 2016 hack, and repurchase tokens under 1 billion. So it's at 1 million, sorry. So it's going to be massive. Binance also do token burns every quarter to get down to 100 million tokens, but other things that they have: reduction in fees and other benefits, futures trading, platform and services. So in my opinion, it's not as nice. It's only nice because it looks good at the start. 100 million is a final element of supply, which is quite low compared to the 1 billion start point. So in terms of scarcity, if you get the right entry, as I keep saying, it might be quite a good investment, if I'm going to be honest with you. But if you were starting to buy this when there's a lot of tokens already been burned and they've already been like kind of inflated price, I would leave it. I would look for another option. I'd look for another exchange coin, a more of a risky bag, but use profits. Like I always say, use your profits. Do not go full tilt on these. Not everything's going to be a Binance success. So in terms of Binance, what's different? Binance have obviously the launchpad, the IEOs, all that good stuff. Now obviously Bitfinex are going to be doing an IEO very soon as well. But ultimately you've got to remember one thing. Binance is a machine that's got a lot of users. It's going to be a lot of interested people. Binance is a really good currency. It works very, very well. It's used in other industries such as real estate and across the globe. But when you consider where Binance has been compared to Bitfinex, there's a big chalk and cheese. Reputations govern price action, they govern investment safety and all that good stuff, and most people want to invest in the token that's got a much bigger usage. Look at the launch pad on Binance compared to what Bitfinex are going to do, and I want to just quickly jump onto Bitfinex because they have got their first IEO. Or is it? I don't know. Now I've looked at this and I've seen this, and it kind of, you know, it's interesting that they're starting to do this, but they have to raise money. So all I'm going to say is this: do your own research and do not look at throwing money into the likes of Leo token if you do not know what you're getting into, because there's a massive chalk and cheese when you look at Leo compared to Binance token. I mean, look at Binance token for example. It's a absolute huge amount. Now they've still got 44 million tokens to burn. Bitfinex token, the Leo token, have a lot more to burn, and eventually over time that will create scarcity. It will create price pumps, but you've got to get in at the right time. Does it look like a good time to invest at the minute? It's a possible good entry point, in my personal honest opinion, not financial advice. But if you are looking at this in the next 6 to 12 months, and you see it over $10 because X amount of supply is gone, all that good stuff in the market's very, very bullish, you've probably missed the run because it's still quite high supply. So there you go, that is my honest take on it all. There's not a lot of information there. It's quite obvious information due to the the current court and legal battle that's going on. That's one thing that has not been fully addressed yet, so be mindful of that. There may be more mud shades flying towards Bitfinex via the media outlets. So again, do your research into whether you want to use a Leo token or actually use Bitfinex as an exchange. Is it safe? What will happen if there's a court case that goes against them and they freeze all their assets? It's going to create a massive, massive issue, because that's still not been settled. Other things to remember, this is their second IEO that they've ever done, or their second ICO, essentially coin offering, due to elements of the previous hack that they had to do. And again, same circumstances, they've got to pay money back. So it doesn't look very good in my personal opinion. So for me, I'm not going to be investing in it. That's my personal honest opinion. But if you guys do, have a little look, do your own research. But I've always said, have an exchange token that's doing well, that's going to have an exchange that's going to grow. If they've got good utility and good token economics, it'll do okay. Okay, that's just usually how it works. So that's today's video, all done and dusted. I do apologize if my screen looks pretty bad today, but you know, it is what it is. It's really, really crap outside. Check out the latest video, my previous video as well, and obviously hit that subscribe button and press that share button. See you in a bit.